Greetings and welcome to Table Talks at Waco Shepherd's Heart, where we bring different members of the community in and just have conversation about who they are, their passions, and how they're involved with our city and how we can all make Waco better. Today we have Jamie Goble from Waco Foundation joining us. I've gotten to know Jamie over the last few weeks, and she's really passionate about her subject. But before we get into that, Jamie, tell us a little bit about yourself.
Sure. Yeah.
You're not a Waco native.
I am not.
But got here as fast as you could.
That's right. That's right. Well, first of all, thank you so much for inviting me. I was so excited to get the invitation because we have gotten to know each other and working together over the past several weeks, and I have come to a very great understanding of what Shepherd's Heart does. I moved here because my husband accepted a job with Baylor University. He's the women's golf coach. And
very cool.
Yeah, that's right. So we have been here now. We're in our 12th season. We live life according to golf seasons.
Okay. Now, is it one season a year or is it a couple?
So we count it as a season in a year, but they do play a fall season and a spring season.
Okay.
So a little different than other sports. Their championship season is spring. It leads to the Big 12s, regionals, and then the national championship in the end of May.
Very good. And do you go to the matches and watch, or do you just stay home and hear about it?
We actually do. We have traveled to see his team play. Of course, now we also have a son who's in 6th grade and can't always miss school for all the matches. But we were fortunate to be able to travel to see the team play.
Very good. And so you have a son.
Yes.
And he's a 6th grader
He's at Waco Montessori School.
Waco Montessori. Mm-hmm. Awesome.
Yeah.
Well, very good. And when you came, you didn't come to Waco Foundation, did you?
I didn't. I actually am a licensed attorney in Florida, and then I'm also now licensed in Texas. And I practiced law, a very niche area of law and private protection rights for property owners, condemnation law, and decided that maybe with a son, a young child, and my husband traveling, that it might be better to get a little more career focused, 9 to 5 hours kind of thing. So I went to work for a local bank, Community Bank and Trust, and I was a trust officer for 7 years.
Very good. Mm-hmm. Very good. And then you made the move to Waco Foundation.
I did. I heard there was an opening at Waco Foundation, and I think it combines 3 of my passions. One is my love for the Waco community. I wouldn't have claimed that the first 2 or 3 years I was here. It was hard to be a new mom in a new city and without any family around. So, but I quickly found an area that I love to volunteer and got real involved in the volunteer community and met some really great friends. And actually, that's how I probably got my job at Community Bank and Trust, getting to know some people that worked there because they're also very involved in community service. And I am also a lawyer, and I have an interest in making nonprofits sustainable. So you put all those 3 things together, and I took a job at Waco Foundation, and I'm the Plan Giving Director.
And that's what Waco Foundation's passion is to help nonprofits in Waco.
That's right.
Be sustainable.
In McLennan County, that's our service area. So community foundations typically have a region they serve. Mm-hmm. Our region is the entirety of McLennan County. Some communities, foundations serve multiple areas, multiple counties in a region, but we serve McLennan County.
Very good. Now, planned giving, that's a big statement, isn't it? It's a multifaceted question, but would you unpack that just a little bit for us?
Sure. So planned giving, if you think about maybe a one-time gift that you might make to a nonprofit, say the end of year letter, angel letter, that sort of thing, or even if it's dropping some change into a bucket. That's a one-time gift. It comes from your cash resources. It's what you have probably extra after you've paid for your living expenses. A planned gift, if you think of that more as a gift of major assets. So a lot of times people have a hard time understanding what we mean by planned. But if you think of that as major assets, it's things that you are saving or that you've somehow come into, whether it's through the sale of business or real estate. It's something that maybe is going to need some counsel from a lawyer or a CPA or someone like me, a planned giving professional, that takes a little more work than just pulling out your wallet. It also probably is going to be the largest gift you ever give. And we tend to think of planned gifts as things that might come after you aren't going to be using them. So after your death, but you're able to make this dedicated gift intention during your lifetime. So you're not going to be using it while you're alive, and you're also not going to use it when you're gone. So you make a choice to leave it to a nonprofit.
Now, when you talk about leaving a gift, you're not talking about all of it, right?
Well, it could be.
It could be. Yeah, that's true. Depends on who it is, right?
That's right. It does. The average planned gift in the United States, there's a Giving USA comes out with a study every year. It comes out about June. The last data that we have says that the average gift from an American is about $60,000 planned gift. Now, when you think about that, I mean, most of us don't have $60,000 to just pull out of our checking account or our wallet or, something that we're not going to be using. Sure. But if you think about a planned gift as a piece of the whole pie, so we'll get to that, but alluding to a piece of your assets, so not all of it, but a piece of it. Say you have a home and maybe a retirement account. You may have physical assets. All of those things, once they're liquidated and the sum total of that is, a piece of that gift can then be given to or left to a nonprofit as a beneficiary. So it doesn't have to be the whole thing, but it certainly can. Waco Foundation just received Malcolm Duncan Sr. gift earlier this year. We announced, and that his passion was for secondary education for McLennan County high school students. And that's what it's going to do. And it was his entire estate. So wow, yep.
That's impressive.
That's right.
And the best gift or the greatest gift he ever gave his whole life.
That's right. I want to do an exercise to see. So he supported the MAC College Money Program, which is now called the Duncan Scholars Program, for 20 years. And he recruited and solicited his friends and people who knew his passion for that over those 20 years to fund those college scholarships. And I would like to see if we added up all that money and all those years, if it would even come close to what he left in after his lifetime in a planned gift.
Right.
Because typically that's what happens. Your major gift is what you leave after you're gone. The greatest impact you're going to have is after you're gone.
Can you just illuminate a little bit why the greatest gift is after you're gone?
Mm-hmm. Probably because the largest asset that most Americans who own a home have is their home. And so once they get to that point where they have accumulated their assets, they're in retirement, your expenses go down, you might have your home paid for. And so that appreciation and value is just where the majority of the assets are. What we're also seeing is retirement assets, qualified retirement plans, because of when those came about under our federal laws, though that generation is aging, and so that piece of the pie, the qualified retirement plan, is where you can designate beneficiaries. And we've got a host of laws, and people should definitely talk to their accountant, especially at this time of year. If you are over the age of 70 and a half and you are required to take a minimum distribution like an RMD, you can actually give or direct your plan administrator to give that money directly to a nonprofit, and it's excluded from your taxable income. So if you think about that, that's a way to give during your lifetime, a piece of your pie now, but you can also name that same nonprofit or other nonprofits as a beneficiary on that IRA plan. And a piece of that asset would also go to a nonprofit. And now we're getting into taxable questions. And so that's really where that planning part becomes vital to making sure that you leave the beneficiaries you intend, meaning a nonprofit or a person or a family member, and not maybe the tax man
Right.
as your beneficiary.
Right. Right. I heard someone say one time, everybody has an estate plan. And if you're not in charge of it, the state has one for you.
That's right.
And so it is a good time to really take a look and see what is going to happen with my assets. Now, one of the things that you'd mentioned before that I thought was really fascinating as well is, you mentioned the tax piece. Sometimes there's an asset that would actually be a tax burden on who would be the beneficiaries or the descendants of someone that's deceased. Talk to me a little bit about that.
Sure. So something that happened major at the end of 2019 was a Secure Act that was passed. And then, come January, February, March, we sort of had a world pandemic. And so it got more coverage, rightfully so, because of the loss of human life. And nobody wanted to think about taxes. And even our tax deadline got, extended. So the things that might have been real relevant to people during that time were kind of put aside. But one of the major things out of that new legislation that came out was the end of we used to call it the stretch. So when you inherited an IRA from we're going to talk about just next generation beneficiary,
right,
not spouse. There's some definite exceptions to this, but if you pass away before then, before the end of 2019, you left your IRA to your children. Maybe you had two daughters and you divided your IRA between the two of them. Well, they would take, starting immediately the next year, an RMD from that IRA or that qualified retirement plan according to their life expectancy.
Would you do me a favor?
Sure.
And all of us, just one more time, what is an RMD?
Okay, RMD is required minimum distribution. And when you're the taxpayer, you have to start taking that at 72. I mentioned 70 and a half. That's when you can start giving it away, because 72 became the new age that you're required to take it.
Right.
But the IRS didn't change you can also give it away at 70 and a half to 72. So now we have two different ages, which can be kind of confusing.
Isn't that fun? Nothing like government to make us happy.
When you inherit an IRA, before this change in the law, you used to have your entire lifetime to take the required minimum distribution out and pay the tax man a little bit of tax on every distribution, which is why the RMD is required, so that the IRS can have a little piece of what they've allowed you to save,
right,
virtually tax-free for your lifetime to save for retirement. What happened with the loss of the stretch law is now you have to leave. If you leave a beneficiary, your next generation beneficiary, on your IRA or qualified charitable or qualified retirement plan, they have to take that out over 10 years. So if you are fortunate enough to have worked very hard and accumulated $500,000 in your IRA or $1 million in your IRA, to divide between your children, two of them would have to take $250,000 to $500,000 over a 10-year time. That's a huge burden on a person, and when you think about it, it's a gift, but it's also a portion of that's going to get taken by taxes. So there's tax planning that can be done to make sure that you leave a non-taxable beneficiary, like a nonprofit, as at least a portion of your beneficiary on a qualified retirement plan. And then you leave something that doesn't have tax implications, like life insurance or, a home things that can be sold and then gifted through beneficiary designations to your living beneficiaries. That's why I would encourage you, if you're at all thinking philanthropically minded, that you want to leave a nonprofit a gift, that you really consider talking to a lawyer or CPA to make sure that you can make the wisest choice. It actually can save money by leaving money to a nonprofit, so that you end up gifting more than you intended to your family if you leave a nonprofit beneficiary.
Awesome. One more question.
Sure.
At least. Let's talk about Pie Society.
Okay.
Tell me about Pie Society.
Okay. So Pie Society, I made the mention of a piece of your pie, piece of your assets is what can be left to a nonprofit. And really about 11 years ago, my predecessor at Waco Foundation, Rachel Hobbs, she came up with the idea with our executive director, Ashley Allison, for a visual representation of what we're talking about here. And the idea of a pie, Waco Pie Society, that was what came out of it. And there had been a generational wealth transfer study done among the I-35 corridor community foundations, Waco Foundation included, and this number is mind-blowing. And this was, a decade ago, that said there was almost $90 billion with a B dollars in the Central Texas region that was going to be transferred over the next 50 years. We're 10 years into that, from one generation to the next.
Wow.
And if nonprofits could just capture 5% of that $90 billion, what that would mean to their sustainable futures.
That was the question. That was the magic word, sustainable. You said that earlier. I knew that there was the importance of sustainability and the connection with nonprofits.
That's right. So the one-time gift, the annual gift, even a major gift that supports a nonprofit, those are great. Those are necessary. They keep the lights on. They allow you to do this sort of thing.
Right.
But what they don't do is see the future. They don't help the nonprofit live it out, live the mission out. What if a major gift donor or a monthly donor stops giving? Who's going to fill that gap in? And so what a planned gift helps do is plan for the future. It makes a sustaining gift possible so that we don't have to worry in 10 years where Shepherd's Heart's going to be. We know it's going to be here serving the same community. Waco Pie Society is a visual representation of how leaving a piece of that pie to a nonprofit allows that nonprofit to sustain its future. If you just use the round number of $1 million, if you as a nonprofit are able to have $1 million in sustainable planned gifts come in, and that money is endowed. And what we mean by endowed is it's set in stone that this is the principal amount of the gift, and we're not going to touch that. We're just going to let it grow, and we're only going to take the income and interest that comes off of that gift. So over time, with the growth in the stock market, if it's invested wisely, it grows, but the income and interest that it spins off also grows. And so $1 million could give a nonprofit $50,000 a year in income in an average year. And so what would $50,000 do for every nonprofit in McLennan County? And Waco Foundation is fortunate enough to already be in that position. We are different than many community foundations. We don't fundraise for ourselves. We fundraise for our Duncan Scholars, formerly the Mac College Money Program, to support that vision and sending Waco high school students to college. But we don't fundraise to support our sustainability. We have had 4 major gifts, planned gifts, come into the foundation, and that's what we run our operations off of. And that's what we do our $6 million in granting and scholarships out every year. We want other nonprofits to feel that same relief from the burden of daily, monthly, and annual fundraising. We want sustainable gifts, and the future of a sustainable gift, it comes from a planned gift. It comes from that gift that someone, it's going to be their largest gift, and it's going to be the most significant gift that they ever leave. One thing that comes out of that Waco Pie Society, though, the burden of not only having that continued fundraising is shifted also to the stewardship piece. So Waco Foundation through Waco Pie Society stewards the donors who make a commitment to leaving a planned gift to a nonprofit in McLennan County. We steward those donors because we realize our small local nonprofits are doing the mission work. They don't have time to continually thank and remind the donor how important they are. They will, but we're going to continue to do it for them. And we've set aside resources to do that. That's what I'm going to, that's what I'm going to do. And it helps us to also make sure that the message stays relevant to the donors. Another thing that came out of the Giving USA study was planned givers, people who have committed to that gift after their death, tend to become more involved, more engaged in lifetime gifts because they've already committed to the future of that nonprofit. So they want to make sure it's bright during their lifetime so they can see it.
That is so awesome.
Yeah.
What you just shared was the piece that hooked me in our first conversation.
Okay.
That the nonprofits, and for us, Shepherd's Heart, those that give to Shepherd's Heart today can be sure that Shepherd's Heart is still here 60 years from now, Lord willing, when we're all gone. But the mission and the passion of what makes us who we are continues on. I think that's awesome.
That's right. I think we would all love to see the need for the work that Shepherd's Heart does go away. That would mean every person is receiving the food and the nutrition that they need, but it's just probably not going to be that way in our lifetimes. And we just know that we'd be leaving behind a sustainable model that is supported financially and the work can continue. I think it also goes to say a lot about the donors because it's not that they think the mission's going to end, but they see that the need is going to stay, is going to continue, and so they want to be part of the solution, not let it stop with their death.
That's something I want to touch on just real briefly because, again, poverty isn't static. It shifts from person to person. So while in 60 years or even 5 years, next year, we'll still have people in poverty, but it won't be the same people next year as it is this year. Life happens, things happen. And when a community comes together and helps sustain each other, then we're all better. We all grow and we all benefit.
That's right.
Jamie, thank you so much for your time today. Thank you for the information and thank you for sharing your passion with us.
Absolutely, Howard. I appreciate you inviting me to join you today. Thank you. If you'd like more information about Waco Foundation or Waco Pie Society, please visit wacofoundation.org or wacopiesociety.org. You can reach me at 754-3404 or by email at jgoble, Goble, @wacofoundation.org.